What's up, everyone? My name is Ali. Welcome back to my world of stocks. Now, as you all know, artificial intelligence is on the rise right now, with many AI stocks having already shot up to the moon because of all the hype and future potential. Pretty much can't listen to a single earnings call these days, in fact, without hearing management talk about how much AI is helping them improve their businesses. Well, today is really a special video because I'm actually buying two brand new AI speculative stocks myself that I have never owned before in my life. And I'm going to tell you all about them. And by the way, with so many AI stocks having already skyrocketed, especially this past year, well, these are actually two stocks here that have crashed by giant amounts, if you can believe it. And these are also stocks that I just personally feel have a lot of turnaround potential for the long term. So I am pretty excited about them. Having said that, though, I have to remind you guys that these are very speculative, high risk stocks that are not only down a lot, but they're also unprofitable. So as always, you got to do your own research and make your own decisions. Don't just copy me or anything that I do. You got to make your own decisions for really investing in whatever stocks fit you the best and what your investing style is and what you're trying to do out there in the market. And again, these are small speculative stocks that I'm just kind of buying in very, very small amounts. And then I can look to add to later on if I like the progress that the companies are making. But with all of that said, let's go ahead and just jump straight into this because I can't wait to share these two stocks with you guys. So let's not waste any more time. Let's just go ahead and talk about these two stocks that I am actively buying for the first time ever. All right, and the first purchase here is going to be the AI software specialist known as C3.ai, who not only has AI in their very name, but it's literally their ticker symbol too. It's AI. And that's because this company provides data analytics and other AI-powered software and services to any company that needs it across a multitude of different industries. For example, a bank or financial institution might use C3's machine learning capabilities to detect fraud across a giant amount of financial data that humans might otherwise miss. So far, it's already shown to decrease false positive alerts by a whopping 85%, while also increasing the accuracy of suspicious activity by as much as 200%. It can also be used for smart lending to improve the efficiency and accuracy of risk monitoring and loan acceptance. It can be used by law enforcement and the military for greater accuracy in crime monitoring, as well as spatial awareness and strategic planning. And it can even be used for large-scale asset management, like in the oil and gas sector, where they've shown to reduce unplanned downtime by as much as 50%, while also reducing the total maintenance cost by as much as a quarter of it too. All of which is huge, by the way, because if you can reduce the downtime of these giant machines while also reducing costs and keeping more of your capital to invest back into the business, especially on these giant like oil rigs and facilities where maintenance costs are so incredibly high, well, that's a huge selling point for C3. And because most of it is done at a software level, it can easily be marketed to other companies by simply asking them to just give the platform a try, especially these days coming off of the pandemic with so many supply chain issues. Well, C3 alone has shown the ability to reduce inventory levels and holding costs by as much as 50%, while also reducing shipping costs by as much as 35% too. And these aren't just like tiny little companies either. Some of their biggest customers include well-known entities like the US Air Force, who uses C3 to reduce the downtime of their aircraft, as well as Royal Dutch Shell, who uses C3 to maintain over 10,000 various gas-related assets. And there are countless more examples and use cases just like these all over their website if you look through their various apps and offerings. But the point is that I just see a lot of potential here to scale up these services over time and then rake in some, potentially big profits with software-like margins. Unfortunately, though, that's really where most of the risk comes in from, as the company still generates very high losses on the bottom line. And while the past 12 months did at least show signs of improvement in both their operating and free cash flows, well, they were still negative by tens of millions of dollars. And their revenue growth is also a bit smaller than I would like it to be, at less than 20% expected in each of the next 2 years, compared to their high prices sales ratio of more than 8, which is about 180% higher than the sector median. Mind you, this is even after the stock has already lost around 80% of its total value since IPOing a few years ago. However, that's where I mostly see the bad news end and the long-term opportunity begin, which I know I sound a little crazy for saying this, but I actually think that there's a few similarities here to Palantir's business, which has seen their stock skyrocket right along most other AI stocks this year. But C3, on the other hand, they've instead cratered into the ground and they're actually negative year to date by a double-digit percentage. Long term, though, C3 estimates that the total addressable market for just AI software alone will reach almost $600 billion by 2025, and yet they only did about a quarter of just $1 billion in sales in all of last year. And Precedence Research even sees the market surpassing $1 trillion by 2032. So there's still a ton of room for growth here if they can just capitalize on the opportunity, which is really why analysts think that their EPS will rise by over 50% a year through the next 5 years, hopefully leading to some stronger profitability opportunities along the way, which again is where I really think that the majority of the potential lies here, because right now the stock is of course still very expensive based on sales, but when profits start rolling in, I mean, this could really turn into a different story here, similar to what we've seen happen with other AI stocks that have seen profits really skyrocket recently, like for example, Nvidia. Obviously, I'm not comparing the two. I trust a company and a stock like Nvidia way more. It's way less risk. This one is a higher risk speculative turnaround play in AI that, again, is not currently profitable. But the speculation, the assumption, what I'm hoping for is that they turn that around and eventually do become a more profitable company that can make those kind of software-like margins in AI. We'll have to see how it all plays out. It's still a very, tiny position just to start out here, but it's one that I hope to build up larger over time. Moving on though to purchase number 2, well, that's going to be in the AI insurance disruptor known as Lemonade, ticker symbol LMND, who, just like C3, saw their stock price also rise a lot right after IPOing in 2021, reaching more than $180 per share, but only to later crash and lose more than 90% of its total value, while also being down over 5% negative this year too, despite the run up in most other AI stocks this year. So why then do I like Lemonade as a speculative turnaround play? Well, like C3, this is another software-based company, but one that is primarily focused on disrupting the massive insurance industry, which is worth more than most countries' GDPs at many trillions of dollars. And it aims to do this by using AI in virtually all aspects of its business, from the way they measure risk and how they price their premiums, to even their own operations, customer service, and how they interact with clients. For example, Lemonade recently launched their most advanced AI model to date. It's called LTV9, which is a predictive AI model that measures the lifetime value of customers, and it's being used to run a ton of different metrics through its machine learning algorithms to calculate and estimate the likelihood that a customer will do things like file a claim, purchase multiple products, or even switch insurers. And it's able to do this with much higher precision than traditional methods. In fact, they use hundreds of millions of customer interactions across 160 terabytes of data to train 50 different machine learning models, which they use to then power their interconnected neural network. And on the customer service side of things, their generative AI platform tends to be better received than your typical human insurance agents and salesmen that unknowingly try to upsell you on things you might not even need. Hence why they tend to be so disliked, so much by the general public. But Lemonade's AI chatbot, on the other hand, not only saves on costs, but also gets customers insured in only 90 seconds and can process claims in just 3 minutes, while also being ranked #1 in customer satisfaction over the competition. And these investments into AI are helping Lemonade steal market share left and right, with, by the way, the highest percent of first-time buyers of renters insurance choosing Lemonade. These are customers under the age of 35, which is a key demographic, by the way, for adding on more services as they grow older, which is something that is crucial for Lemonade, who's added on several new insurance products since IPOing. Yet, to this day, they still only have less than 4% of their customer base even using multiple products, while the legacy players have a whopping 60%. And that just means that there's huge room for expansion there. In fact, Geico is estimated to be over 50 times larger than Lemonade as a whole. And if they were to 10x as a company and then 10x again after that, they would still be smaller than even State Farm or AXA. So in other words, the sky's the limit here in terms of growth opportunity. And that's why you often see their revenue skyrocket at times, in most years. However, that's also where the risk comes in, as just like C3, this is another company that is bleeding heavily on the bottom line, sometimes even losing more than they generate in sales. Personally, I can excuse some of this given the horrendous conditions that this startup has really had to deal with in recent years, like sky high inflation, interest rates, and even severe weather conditions. All things that have risen repair costs for insurers while also making it harder to borrow money for any unprofitable companies. So it's kind of just like the worst imaginable conditions for like an AI insurance startup like this. But from here, if inflation and interest rates start coming down, then we could see a scenario where premiums actually rise while expenses fall, leading to better cost ratios for Lemonade, which is something that we're already seeing early signs of. Plus, given the stock crash, I actually think that their EV to sales is not that bad here at an even lower ratio than the sector, despite what I feel is them having, more growth opportunity than much of the competition long term. And especially as they invest heavier and heavier into artificial intelligence, because, if Lemonade was to ever become a entirely autonomous insurance type of company with AI handling almost the entirety of their business, well, they could actually end up with some very high margins longer term. But again, that's where all the risk comes in, because in the shorter term, this is a company that will continue to bleed money for some time. And if the economy were to get even worse from here, well, I don't know how much longer they'd be able to survive those kind of conditions. But I'm willing to take a chance on this one, even though it is high risk. It is one that I also feel is high reward potential. And so I'm buying in very slowly in small amounts myself. But I would love to hear what you all have to say, what you all think about these two stocks that I mentioned today, especially because they're brand new additions for me. I'd love to hear your thoughts, because I always take everything you guys say very seriously. And it helps me make some of my decisions too. So please drop your feedback down in the comments section and let me know if you agree or disagree with anything I said. But regardless, I hope you're all doing well. By the way, let me know if there's any other AI stocks that you guys are investing in. I'd love to hear about those too. Maybe I can make videos on some of those choices too. But anyway, thanks again for stopping by, my friends. I appreciate all of your support. It means so much to me. I hope you're all doing well, and I will catch you in the next video. All right, take care, everybody. Bye-bye.